Hello and welcome back to Money Moves Daily Japan. It's Thursday, September 4th. I'm Sophia Reyes.
And I'm Jason Miller. Sophia, it's been a bit of a seesaw week, but the Nikkei 225 is certainly having a much better day, pushing up over 1% again. What's giving the markets this boost today?
Well, Jason, after a slight dip yesterday, the Nikkei 225 has rebounded strongly, climbing around 1.1% to sit above the 42,400 mark. The broader Topix index also added 0.7%. This positive momentum is largely tracking a tech-driven rally on Wall Street and, importantly, a welcome retreat in Japanese bond yields after they'd hit 17-year highs recently. We'll be diving into how the Bank of Japan is subtly influencing this, and later why an AI boom is driving record profits here.
An AI boom in Japan? That sounds like a story. Plus, we've got some rapid-fire updates on a surprising retail success, a shake-up in the political landscape, and how overtourism is literally blocking views of Mount Fuji. And crucial for everyone listening, we'll tell you what key data released tomorrow could really move the yen. Stick around.
All right, let's kick off with the main event, the Nikkei's performance and the shadow of the Bank of Japan. Today's rebound sees major gains in names like SoftBank Group and Advantest, which are key players in the tech and semiconductor space. But the big question looming is what the Bank of Japan will do next. Governor Kazuo Ueda reiterated this week that the bank's stance on rate hikes remains firmly intact if growth and inflation continue as expected.
Rate hikes remain intact. Okay, Sophia, for our listeners, what does that actually mean for, say, a multinational company looking to borrow yen for operations, or even for a tourist thinking about visiting Japan next year? Does this signal more yen strength coming and higher borrowing costs across the board?
In essence, yes. It signals a continued path towards policy normalization, even if the timing is still uncertain. A sustained push towards higher rates would likely cause the yen to strengthen further against major currencies, making imports cheaper but exports pricier. For companies, it means borrowing costs are definitely on an upward trajectory. We've already seen the 10-year Japanese government bond yield pull back today, but it's been volatile after hitting those 17-year highs. The market is very sensitive to these signals.
So, volatility could be the new normal for a while. Got it. Let's switch gears a bit. Earlier you mentioned an AI boom. It feels like just yesterday Japan was, dare I say, a bit behind the curve in some tech sectors. What's the real story here?
It's a fascinating development, Jason. Japanese firms are actually on track to log record profits for the fourth consecutive year in fiscal year 2024. And a significant driver of that, alongside the financial sector benefiting from the end of negative interest rates, is the generative AI boom. Companies involved in semiconductors like Lasertech and Advantest are reporting robust profit growth. Advantest, for instance, revised up its earnings forecasts. The yen's fluctuations have also played a role, benefiting export-oriented companies and boosting tourism-related consumption.
So, a positive feedback loop. Weaker yen boosts exports and tourism, and then that combines with the AI growth. But does this mean all the big players are hogging the spotlight, or is there room for other companies to shine?
That's a sharp question, Jason. While super large stocks like SoftBank Group and Advantest have indeed seen massive surges, SoftBank Group was up 85% compared to the end of last year, and Advantest rose 5.7 times compared to late 2023. There's a noticeable shift occurring. Funds are now reportedly moving towards mid-cap stocks. The PE ratios of some large-cap companies have reached 30 to 50 times, intensifying profit-taking pressure. This makes relatively undervalued mid-cap stocks more attractive, hinting that the next wave of star stocks might emerge from this segment.
Time for our quick hits and some noteworthy headlines. First up, good news for a retail giant.
Indeed, Fast Retailing, the parent company of Uniqlo, saw its Japan same-store sales jump by 5.3% year-over-year in August, a significant acceleration from the previous month's 2.4%. Clearly, Japanese consumers are still flocking to their stores.
That's a strong number, showing healthy consumer activity. Next, a bit of political news that could signal some shifting sands. Curious,
Kyodo News is reporting that Japan's ruling Liberal Democratic Party's Moriyama intends to step down. Prime Minister Ishiba stated he would decide on the responsibility at the appropriate time, emphasizing the need to swiftly conduct economic policies, including tariffs. This indicates some internal party dynamics at play.
So potentially a bit of political jockeying, but with a focus on economic policy. And finally, something that's become a global talking point. My social media feeds are full of pictures of people posing in front of convenience stores with Mount Fuji in the background.
The Mount Fuji Lawson phenomenon. It has become a symbol of Japan's over-tourism problem, leading to measures like a large black screen being erected to block the view. While tourism recovery is generally a positive for the economy, this highlights the growing pains and the need for sustainable management.
All right, Sophia, what's the one thing everyone needs to be watching in the next 48 hours that could really shake things up?
Without a doubt, it's tomorrow's wage data. While August's corporate goods price index is due next week, and we'll see August industrial production and retail sales figures later in September, investors are absolutely glued to Friday's wage data. Bank of Japan Governor Ueda explicitly said that the bank's rate hike stance remains intact if growth and inflation unfold as expected. Wage growth is a critical component of that inflation outlook.
So strong wage growth means more certainty for the BoJ to hike rates, which could mean a stronger yen and potentially tighter financial conditions. Weak wage data, conversely, might keep them on hold, perhaps weakening the yen. So it really puts everything into perspective for those of us investing or even just visiting Japan.
Absolutely, Jason. To recap, today we saw the Nikkei rebound thanks to global tech trends and easing bond yields, but the Bank of Japan's hawkish undertones regarding future rate hikes are keeping everyone on edge. We also explored Japan's unexpected AI-driven profit boom and the emerging interest in mid-cap stocks.
Plus, we touched on Uniqlo's strong sales, the political shifts within the LDP, and the ongoing challenges of over-tourism. But the biggest takeaway for tomorrow, keep a very close eye on those wage data figures, as they could be the next major signal for the Bank of Japan's policy path.
That's all for today's Money Moves Daily Japan. I'm Sophia Reyes.
And I'm Jason Miller. Thank you for tuning in. Don't forget to subscribe wherever you get your podcasts and leave us a review. Your feedback helps us bring you more of the insights you need.